Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Happy Friday, everybody. Hope you're doing fantastic, and happy March. Welcome to March. It's hard to believe that we are through already 2 months of 2019, and I don't know about you, but I am enjoying this extra light that we're beginning to get. So anyway, here's what's going on with the market. Interest rates finished the week worse than where they ended last week. We saw a slew of economic data that was released into the market. So let me dive into that, but then kind of tell you why the market really got a little bit worse in terms of interest rates. A lot of economic data as it pertains to housing. We did see housing starts down slightly, but building permits were up. FHFA, Home Price Index, which is the government's index for finance loans, conforming loan amounts, and that did show that while prices increased by 0.3%, so still showing increases, it moderated a little bit. It was down 0.1%. It was at zero point 0.4 the previous month, so it moderated to 0.3, still showing an increase, but at less of a less of a severe pace. We also did see the Case-Shiller index come in. The 20-city index did show also moderation. It showed an increase of 4.2%, but that was off the previous months, which was October, November. This Case-Shiller index is a little bit of a lagging index. October, November showed an increase of 4.6%, and then November, December was 4.2%. So it did still show an increase. Now Denver showed flat, zero. And believe it or not, that was actually pretty good compared to the rest of the country. Phoenix, Las Vegas, they were up slightly, and Atlanta as well. Denver, again, was flat, but that was still amongst the top tier of the 20-city index. We also did see pending home sales come in at 4.6%, and that was a much greater number than the previous month, which was down down 2.3%. So the home price index did rebound a little bit, which we were expecting it to do. PCE, personal consumption's expenditure, so that's a measure of inflation. That showed that it moderated a little bit. It was down 1.7, or it showed 1.7, down from 1.8, so down 0.1%. We also did see personal spending, that was down, but personal income was up. Also this week, we did see the Fed Chair, Jerome Powell, speak before the House and the Senate. He basically said that the Federal Reserve will remain flexible, and they're just watching the monthly data, so no big surprises there. Again, what we did see move the market here was the stock market. The stock market did have a really good week, and it had a good week based upon the expectations for a deal being made with China. It's getting closer and closer. Stock market like that. Stock market rallied. Interest rates suffered. And interest rates suffered to the point to where we broke through some important floors, some important resistance levels, which is not a great thing. So we could see, if we don't stabilize here, we could see rates deteriorate a little bit further. If the stock market does continue to move higher, I would expect that to happen. But, you know, anything can cause that whole shift to reverse. Hopefully we will stabilize. But for right now, rates are a little bit worse than where they were over about the last 3-4 weeks or so. But hopefully we'll get some stability here. We'll keep you informed with what happens next week. Again, eyes are going to be on what happens with the trade talks. And next week, we'll let you know what the result is and how the markets are reacting. Thanks for joining me with Java with Jared. If you're working this weekend, so are we. So if you have any clients that need any help, please feel free to give us a call. And we will talk to you soon, and enjoy March. Talk to you later. Bye-bye.